So everybody knows the old news of last week was the world's largest asset manager has filed for a Bitcoin spot ETF. And obviously that did lead to the 8 largest money managers in the world all doing a Bitcoin backflip. And they have also become bullish on Bitcoin. That's important because they control over $28 trillion of capital. But the big news came only 2 days ago as Larry Fink came out in this very interesting interview and he had this to say.
And also, I do believe the role of crypto is it's digitizing gold in many ways. Instead of investing in gold as a hedge against inflation, a hedge against the onerous problems of any one country, or the devaluation of your currency, whatever country you're in. Let's be clear. Bitcoin is an international asset. It's not based on any one currency. And so it can represent an asset that people can play as an alternative. I would call the foundation of BlackRock is about hope. You invest for retirement because you believe tomorrow is better than today.
That's right, Bitcoin is going to digitize gold. So what is this going to mean for Bitcoin? Everybody's come out with their projections saying this is how much capital these money managers are going to push into Bitcoin. And today I'm going to show you why all of these projections about Bitcoin's maths are wrong, because I'm going to talk about something that nobody talks about in the Bitcoin space, and that is the Bitcoin multiplier effect. We're going to get to that, but we're going to talk about a few other things in today's video because this article came out that I think is really interesting, okay? So the title of this article says that BlackRock wants to make it cheaper to trade Bitcoin. Again, that shouldn't really alarm you guys until we start reading the contents of this article. The real nugget of this article comes where Fink says it costs a lot of money to trade Bitcoin right now. What we want to do is make it cheaper to trade Bitcoin, and we are going to, quote unquote, democratize crypto. Yeah, that's right. So we are going to revisit this interview a little bit later on because Fink says something really interesting about Bitcoin becoming an international asset. And that does have something to do with the BRICS annual summit that is going to take place in exactly 2 weeks from today. So Fink says that Bitcoin is an international asset. And I'm going to connect the dots for you guys when we come back to the end of this video. And I'm going to show you what this has to do with the recent BRICS summit that is going to take place in 14 days. That's 2 weeks away. And there are rumors circulating that the BRICS are going to back their new reserve currency by gold or Bitcoins. And surprise, surprise, these comments from Fink, I believe, has something to do with the BRICS summit taking place in 14 days. So we're going to come back. We're going to address that. But I first want to show you guys what the Bitcoin multiplier effect is and what it means for these asset managers as they potentially try to push some percentage of their $28 trillion that they control into Bitcoin when only 2.1 million coins are actually available for sale. So let's get straight into this. Most people will say, okay, to reach a $1 million Bitcoin, we need to see $40 trillion of inflows coming into Bitcoin to push that market cap up and get a $1 million Bitcoin price. And I think that's wrong. The reason that most people are completely misunderstanding how we would get to a $1 million Bitcoin price is because the calculations that they're using are just incorrect, okay? They assume that there's 21 million Bitcoins for sale, and that is not the case. So taking a look at the first chart I want to show you guys today, of course, we've got the hodl waves chart. I know there's a lot going on this chart. There's a lot of colors, there's a lot of lines, but all you need to notice is that little arrow right there. That's showing that 78% of the Bitcoin supply has not moved in over a year. It's been hodled, pardon the pun. And this is also backed up by another chart called the illiquid supply chart. So this chart here kind of shows in blue the amount of Bitcoin that is currently classified as being illiquid. And again, all that means is the coins are being hodled. They're not being moved. I know some of these charts have some funny names and all sorts of colors and lines going on, but all they are showing is Bitcoin is getting even more scarce, okay? And that is backed up by the final chart I want to show you guys. This is the 13-year chart of the amount of Bitcoin that's sitting on exchanges. So this tracks all exchanges, Coinbase, Kraken, Gemini, BlockFi, all of them, okay? And it shows that a very pivotal thing happened in March of 2020. You'll see there for the first time in Bitcoin's life the amount of coins actually on exchanges began decreasing, okay? For the first 8 years of Bitcoin's life, coins were sent to exchanges as people didn't understand what Bitcoin was. They didn't understand that you hodl Bitcoin for the long term, okay? People were mining Bitcoin and they were sending it to exchanges to be sold. People were buying Bitcoin in these early bull markets and they were sending them to exchanges to be sold at the end of these bull markets. But we can see here on the chart, 2020 happened, and all of a sudden, for the first time in Bitcoin's life, coins have been leaving exchanges for the past 3 years straight. And you can see 1 million Bitcoins have left exchanges in the past 3 years. In March of 2020, the total amount of Bitcoin on exchanges peaked out at 3.1 million coins. Today, we are only left with 2.1 million Bitcoins circulating on exchanges for sale. So all that means is the scarcest monetary good in human history is just getting even more scarce. And this consideration of it being even more scarce than a 21 million hard cap supply is what everybody is missing when they're doing these maths calculations and determining where the Bitcoin price could go in the future. So now that you understand not all the Bitcoin are actually available for sale, how does that impact the price of Bitcoin? And how does that impact this thing called the multiplier effect, okay? So the multiplier effect is very interesting, and it is the most commonly misunderstood thing there is in the entire Bitcoin space, okay? I think it's so underrated. I wrote a whole 7,000-word article talking about this multiplier effect that I'll link in the bottom of the description of this video, but I'm going to give you the TLDR YouTube-friendly version of it, okay? As I've illustrated, only 3 to 4 million of the Bitcoins actually circulate on a daily basis and are available for sales. That means that when you run the numbers on Bitcoin and try to calculate its theoretical market cap, you have to account for the fact that not all 21 million Bitcoins are available for sale, okay? This chart from Willy Woo's website shows and articulates my point perfectly. He has a 12-year chart showing how many dollars it takes inflowing into Bitcoin to actually push its market cap higher. So we can see the amount of dollars it takes to push the Bitcoin market cap up actually changes based on how many Bitcoins there actually are being circulated on exchanges at any given time. But if we look at a little bit of an average window, let's look at the past 5 years, for example. We can see that over the past 5 years of data, on average, every $1 that flows into the Bitcoin network, it actually pushes the Bitcoin market cap up by somewhere between 2 and 3x. So now that we've learned what the Bitcoin multiplier effect is, let's put it to use. So let's do a little bit of, as Greg Foss would say, grade 11 maths. I want to walk you guys through a couple of scenarios that I have laid out to show you how we should be using this multiplier effect. So the first maths equation we're looking at, we're not going to use the multiplier effect. We're going to do it how everybody does their Bitcoin maths, which I think, with all due respect, is wrong, okay? So everybody's saying, how is Balaji going to be right? How much money needs to come into Bitcoin to push it to a $1 million price tag per coin? Most people think it's only $21 trillion because they're doing the maths like this. They're saying, okay, to get a market cap of $21 trillion, we need to see $21 trillion of money to flow in. And if you have a market cap of 21 trillion, again, we divide it by the 21 million coins that are available for sale. And everybody says, yep, beautiful. That's $1 million per Bitcoin, okay? But that is wrong. They're not using the multiplier effect. So scenario number 2, the next equation we're looking at is what I think is the correct formulation for your Bitcoin mathematics equations. We can see here, we have a multiplier effect of 3. We're using 3 for, simplified demonstrative purposes. If you want to be entirely accurate, you can use 2.6, okay? $21 trillion trying to come into Bitcoin. Well, guess what? We need to add that 3x multiplier. So that gives you $63 trillion in market cap value if 21 trillion tried to flow into Bitcoin. So how much is that per coin? Well, we go $63 trillion market cap divided by the 21 million Bitcoins. Again, we've used our multiplier, so we're going to use the 21, and that gives you a price tag of $3 million per Bitcoin. It's interesting to note that that is only double the market cap of gold, okay? And to actually get your $1 million per Bitcoin price tag, using our 3x multiplier, we would actually only need $8 trillion of money trying to flow into Bitcoin to buy some of the limited coins that are actually available for sale to push Bitcoin to a price tag of $1 million. And that's based upon the hypothetical scenario that the multiplier effect remains at 2.6x. As we've shown over the past 3 years of data, we have been in this perpetual downtrend in available Bitcoin for sale. So I think that downtrend is going to actually continue into the future. So that means the fewer and the fewer amount of coins there actually is circulating on exchanges for sale, and the more Bitcoin is being hodled and hodled into the future, that means that multiplier effect is going to increase significantly. It's not going to be 2.6x or 4x or 5x. We could get into, again, a hypothetical scenario into the not too distant future where the multiplier effect is actually something like 5, 10, or even 15x. Okay, so imagine that. For every $1 that tries to flow into Bitcoin, pushes up the market cap by 15x. Okay, it's outrageous. And when you do the maths, looking at what could Bitcoin potentially be worth, you get some pretty mind-boggling questions. I'm not going to go into them in this video. I want to keep it short and brief, but you can read this article that I wrote in 2021. And a lot of people are giving me a lot of flack for predicting how easily we could get to a $65 million per Bitcoin price tag by 2030 without hyperinflation. If you want to check my maths, don't trust me, go and verify it for yourself. It'll be linked down below. But that is why I don't think we need hyperinflation to get a $1 million Bitcoin, okay? I think the more important thing that Balaji is doing is he's encouraging the hodling of Bitcoin. He's telling people, get your Bitcoin off exchanges, hodl it, don't sell it. And I think that's actually potentially going to have a bigger impact on where Bitcoin goes in the next 90 days, okay? For you to actually kind of create a stampede and create a mass hysteria event where the US dollar goes into hyperinflation, I don't think that's likely, okay? I think it's far more likely that the US dollar is the last fiat currency to hyperinflate, but you could easily see a $1 million per Bitcoin price tag just by generating enough hype and movement around just how scarce Bitcoin is, okay? The scarcer Bitcoin becomes, the bigger that multiplier effect becomes. And what happens when other nation states around the world begin to come to the realization that there are no Bitcoins left on exchanges, okay? Today, you could buy all of the Bitcoin that's currently circulating on exchanges, the 2.1 million coins, for somewhere around $56 billion in cash, okay? Big number, again, but let's put that into perspective. Apple has over $200 billion of cash sitting on its balance sheet, and it's becoming what Michael Saylor would say is a melting ice cube, okay? If inflation's around 10% per year and you have $200 billion of cash on your balance sheet, you're losing $20 billion a day, okay? So imagine Apple saying, okay, I want to at least just take a 10% stake in the Bitcoin network. I want to diversify my $200 billion balance sheet, put 10% of that into Bitcoin. All of a sudden, Apple would want to buy $20 billion of Bitcoin. And guess what? They would drain nearly half the amount of Bitcoins available for sale on exchanges, okay? This gets into some pretty interesting numbers and game theory because think about it. Michael Saylor has around 150,000 coins to his name himself. And imagine if the other 5,000 billionaires come to the realization that Michael Saylor has had, and that Bitcoin is an asset that you buy for 100 years and you never sell. Well, there's only enough Bitcoin on exchanges for another 12 of those 5,000 billionaires to accumulate the same amount of Bitcoin that Michael Saylor holds, 150,000 coins. So just think about what happens when the price of Bitcoin starts to run up and Michael Saylor's net worth begins to climb because 100% of his net worth is denominated in Bitcoin. All of a sudden, he starts to climb that world's richest man leaderboard, and think about the game theory that kicks in if you're Elon Musk or Bill Gates and you see Michael Saylor rising up that world's richest man leaderboard. The only way you can stop him, or the only way you can stay richer than Michael Saylor, is to accumulate more Bitcoin than Michael Saylor. So there you have it. That is the Bitcoin multiplier effect. I hope you didn't notice the change of set. I actually recorded that one in my other Airbnb here in Colombia. I am moving around a little bit. But what does this mean for BlackRock? What happens if this $28 trillion of capital that has just flipped bullish on Bitcoin, what happens if a small percentage of that tries to flow into Bitcoin? Well, you have to use the Bitcoin multiplier effect. And as coins on exchanges continue to go down, like we have seen over the past 3 years, that multiplier effect is only going to increase. So I am a hyperbull, and I believe that multiplier effect will rise from 2.6 to 3 to 5 to even maybe 10. And this is going to continue to increase the more that we have these asset managers flip bullish on Bitcoin. Okay, so why did Larry Fink flip bullish on Bitcoin? In 2017, in this interview I'm about to play for you guys, he said Bitcoin is an index of money laundering. They've come out and announced that they are buying Bitcoin, and I actually did expose that they have been owning MicroStrategy stock in their portfolio months before this ETF filing came out. That's right, in early 2023, BlackRock was quietly accumulating MicroStrategy stock. Very interesting, but I don't think it's as interesting as what could potentially go on with the BRICS countries. Okay, just recently an economist came out and speculated that the BRICS might actually try to back their new reserve currency by Bitcoin. And this is awfully interesting because the annual BRICS summit is about to take place in only 14 days. That is 2 weeks away. And this BRICS summit, I believe, is going to be even more interesting than the 2022 BRICS summit when they announced they're going to create a new reserve currency, okay? We have over 30 countries around the world who have all applied to become a part of this 5-country BRICS coalition in the 12 months after they made this announcement. So if you want to learn a little bit more about the BRICS and why I believe they could be making a move to back their reserve currency by Bitcoin, I recommend you check out the video I recorded on that topic right there. And with all that said, I'll see you guys in the next video.